Hi, welcome to Control and Compound with Darren Mitchell. I'm your host, Darren Mitchell. On today's episode, we are going to dig into infinite banking for real estate investors. Really happy we finally get to this podcast today. Before we get into the episode, if you're listening on YouTube, don't forget to hit that like button, subscribe to the podcast, and click the bell button so you always know when we put out new content. And if you're listening on a podcast platform, please rate and review the podcast. 5-star reviews are so important to us, and we appreciate that. All right, let's get into today's episode. Christina, infinite banking for real estate investors.
I am so excited to be doing this topic, mostly because you wrote the book on this, right? Infinite Banking for Real Estate Investors. If you're looking for this, it's available on Amazon. I'm holding the book up here, but if you're listening on the podcast, go to Amazon, search it up. You're going to want to read this. If you're a real estate investor, you're not going to want to miss it. And it's what we're going to be talking about today. So super exciting.
Thank you for that mention, Christina. So, real estate investing, we're going to start with the infinite banking. We're not going to go through all the details of infinite banking. We're going to kind of focus on the real estate angle and how they combine. But, watch some of the other episodes or listen to some of the episodes we had on what is infinite banking. Yes, we want to control our money. We want to multiply our money like that and asset. We want to compound interrupt it. We want a tax-free retirement. We want the death benefit. We want all those things. But let's kind of look today about, how we multiply money and how we have money do more than one job. So Christina, for most people, where are they putting their money that they're saving, and how many jobs is that dollar doing?
So, the typical person out there is investing in the stock market for their savings. And when you put a dollar into the stock market, that dollar has just one job, and that job is to go up in value. So, one job. Now, as a real estate investor, Darren, how many jobs is your dollar doing when you invest in rental real estate?
Yeah, and Christina and I are both real estate investors, and most of our clients are. So we love real estate, but I want to preface it by saying properly purchased real estate. Okay, so we're talking real estate with cash flow. So how many jobs does your dollar do when you go into a properly purchased rental real estate? Well, number one, especially the last few years, passive appreciation. It goes up in value. Seems to have gone up in value for hundreds or thousands of years. The last 10 years, in particular, last 2 years, have just been incredible. We've seen skyrocketing prices across Canada. Job number two, we have active appreciation. So, active appreciation is you do a renovation, you make your property more valuable, you add a unit, you do some kind of renovation to have your dollar do that other job of actively increasing the value of your property, increasing your rents. Job number three would be cash flow. Hopefully, we have the rent covering all the expenses and some left over, so we have positive cash flow. We've got tax benefits. We're going to write off depreciation and interest, all those great things real estate investors can claim on their income tax. We're going to have the tenants paying down the mortgage. It's pretty cool as a real estate investor when every month the tenants make a payment, pay rent, and every month our balance of our mortgage goes down. So the tenants are paying down that mortgage for us, and we got the power of leverage. And if you're listening and you're a real estate investor, you know how incredible leverage is. You put 20% down as a down payment, you finance the rest, but you get 100% of the growth. So if you're putting 20% down, leverage can literally be a 5 times multiplier. So now we've got 6 jobs that our dollars doing in rental real estate. Now, what happens if we have a bad year? What happens if there's no appreciation that year? It's kind of stagnant. What happens? Well, we're not going to have the passive appreciation. Maybe we didn't do a reno. Maybe we don't have the multiplication of leverage because it didn't go up in value. But we still have cash flow. Okay, we still have the job. We still have the job of tax benefits. We still have the job of tenants paying down your mortgage. So even in a bad year, I believe properly structured real estate is a safer investment than the stock market. Because what happens in a bad year in the stock market? You just go down. So the concept here is real estate investing's been around literally thousands of years, proven way to make money. We're going to take that 1,000-year-old strategy and we're going to combine it with this 100-plus-year-old strategy, cash value life insurance. And we're going to throw some money in the cash value policy, in the infinite banking policy, and then we're going to access a loan and take advantage of an opportunity. It can be any opportunity. Today, we're going to focus on the real estate. So you go buy a property, Use the cash flow coming in to repay that loan that you borrowed from your cash value for the down payment, or you refinance it in a couple of years. When the property value goes up, you refinance it, pay back the loan, and then you move on to the next property. And now you've got two cash flows or two refinance opportunities to pay off the loan quicker. Time you get to the third one, you could be paying off that loan in a year or less. So we're cycling the money through the policy, then into the opportunity, in this case, real estate. And if we do that, Christina, by putting the money in the policy first and then doing the real estate, we mentioned the six for real estate, but what other jobs are we creating for our dollar to do?
Well, now we're on to job number 7. So, what's job number 7? We talk about it a lot, uninterrupted compounding. So, we want our wealth to grow uninterrupted. We do not want those wealth destroyers, the taxes, the fees, the volatility, the spending impacting our growth. So, we've got another job done, uninterrupted compounding. Job number 8, we have a death benefit. That's pretty important. You might not think of it at the beginning, but down the road, having a tax-free death benefit, that's a pretty big job that it's doing for you too. What other jobs do we have, Darren?
Let's see. Number 9 would be financial velocity. And velocity just means our money's in motion, right? Like that's what banks do. Banks don't just take your money and put it in a vault and never move it. What do they do? They keep moving it. They loan it out. They do different things. So we want money moving, not just stagnant. Job number 10 is unstructured loans. And again, for a real estate investor, I can't emphasize how important an unstructured loan is. It's the best type of loan you're ever going to get. When you borrow against your cash value, you pay that loan back when you want, how you want, and if you want. That's huge. When you want, how you want, and if you want. So let's say you decide to just pay interest for a few years. Great. And then all of a sudden you sell or refinance a property. You want to pay the full shot off? No problem. Or what happens if you're making payments, you want to pay the loan off in a few years, and all of a sudden financial disaster hits or an opportunity comes along? Great. Stop the payments, reborrow what you already paid back, borrow what your cash value continued to grow. So that flexibility of those unstructured loans is huge. So we're up to 10, Christina. We get any more?
Yes, we do. So number 11, I'd say would be creditor protection. So when you own these policies personally, they are creditor protected. So if you were to go bankrupt or get sued, anything along those lines, these are completely creditor protected. That's a great job. The next one would be your terminal illness coverage. So, terminal illness coverage, if you were to be diagnosed with a terminal illness, the insurance company will advance you 25% of the death benefit beforehand. So, that's some built in terminal illness coverage for you as well as another job.
Yeah, and that terminal illness coverage, of course, we hope no one ever claims that benefit, but I've been in this business long enough. I have paid that benefit out, and I'll tell you, it's impactful to that family. So if you want to live that last year to the fullest, having access to that tax-free money is huge. Job number 13, we've got a disability waiver. Now, of all the jobs we're listing, the disability waiver is the only one. There is an additional premium for it. The rest of the jobs are all included in this infinite banking policy. The disability waiver, you can include it, but it's an additional premium. It's like we call it a rider. And what that does is if you become disabled, the insurance company will actually pay your premiums for you. So huge, especially for some people that, are worried about disability or don't have enough disability coverage. It's huge, right? No one's going to continue your RSP contribution when you become disabled. This will continue your savings even through disability. And then job number 14, tax-free transfer at death, right? The cash value grows tax-free, but at death, the cash value is converted to a death benefit tax-free. The death benefit stays tax-free as a death benefit, and all that gets paid to your family, your beneficiaries, completely tax-free. So we're up to 14, Christina. What else we got on the list?
Number 15, save on term insurance expenses. So now that if you've got a term insurance policy, it's an expense, right? It's just like your car insurance, your home insurance, but it is important because it's there to protect your income, protect your family. So we want it, but it is an expense. With this, with this policy, our focus is 100% on the cash values, but at the end of the day, it is still a life insurance policy, so you've got a death benefit. As this death benefit grows, you're going to be able to eliminate some of that term insurance that you need on hand, right? Because the death benefit's going to grow. As it grows, cancel out that term insurance for you. So another job that your dollar's doing.
Yeah, and like, I don't want to mislead people where there's not a lot of people that cancel their term insurance as soon as they buy an infinite banking policy, because the death benefit starting out, we're trying to drive it as small as possible so we have the most cash in there and the most cash value and access to more cash. But eventually this is going to compound. It's going to compound uninterrupted. So, for myself personally, I'm a believer in this, so I throw a whack of money in this cash value life insurance, and then I go and use it for real estate. But as a byproduct of that, throwing money, saving money in an infinite banking policy, I reached a point where my death benefit grew to a point was I was actually able to eliminate $2,500 a year of term insurance expense. It was like 200 and some dollars a month. So, I didn't set out to do that, but my dollar just happened. My dollar was focused on the cash value, but it just happened to be doing another job. Right? So that was just another job I was doing, and I was able to eliminate that. And then job number 16, and this is huge, huge for real estate investors. Loans do not affect borrowing capacity. So what I mean by that is, well, it doesn't show up on a credit report, but that's not what I'm getting at, is when you go to get a loan, okay, your financial institution, your bank or whatever, for the mortgage, they're going to ask you where the down payment came from. And I'm going to say what I say to my banker: I borrowed from my cash value. So you borrow from your cash value. The bank says, where'd you get your down payment? Great. We don't consider that a loan for borrowing capacity. So they're going to give you the mortgage. Huge for real estate investors. And I'll give you a couple of examples on this. So how you use this for real estate. So I do some private lending. So my last private lending deal I did, I loaned out $100,000 at 14%. Okay, it was to developer, had good collateral, get my money back. I'm not too worried about the security. I have security. But while I was doing that, my money's in the policy compounding, and I said, great, instead of cashing that out, why don't I borrow 100,000 against my policy? So I called the insurance company up, said, hey, I need 100 grand, please. They said, sure. They didn't ask me if it was a good investment. They didn't ask me when or how or if I was paying it back. They said, sure. I took that 100,000 and I loaned it out at 14%. So in that case, I'm not making a payment until the year is up and I get my $114,000. I go back, pay the loan, and that was just an and asset. My policy was completely unaffected by that. My policy continued to grow the same whether I had the loan or not. So I was able to just multiply dollars, have an and asset. Now my money's in more than one place at the same time. Another one, I bought a fourplex last year, and it was like 375,000. Had to come up with 80 grand. Couldn't go to the RSPs, that money's in jail. Couldn't go to the kids' RESPs, that money's in jail. But I went to this cash value policy and I said, don't touch it, continue to compound forever, but I'm going to borrow 80 grand against, or borrow 80 grand against that, buy the fourplex, get the mortgage, and then our plan there is we've got cash flow on that, but we're going to refinance next year or the year after, refinance it, pay off that loan, rinse and repeat. So I'm going to do that over and over and over again. And what I look at it, I'm growing my cash value tax-free that I'm going to use in retirement. How many multiple or and opportunities can I take advantage of between now? So if we kind of sum up all these 16 different jobs that we talked about, we're not going to do all 16 every year. We're not trying to tell you that. But if you do 4 or 5 of those jobs in the real estate aspect, okay, or the real estate part of this, and you do another 4 or 5 jobs by putting it through the infinite banking policy, all of a sudden you're doing 8, 10 jobs a year instead of one potential job like most people. So if you think of this, we've taken $1 and we're going to compound it tax-free for the rest of your life. And you're going to be able to use it tax-free in retirement. Then we multiplied that dollar and we're going to take advantage, or multiplied that dollar and we're going to have a death benefit. Then we multiplied that dollar and that loan, those dollars we're going to put in the infinite banking policy, put through real estate, and now we have multiple jobs with a multiplied dollar. Multiplied dollars doing multiple jobs versus one potential job in the stock market. And sorry to get on a tangent here, Christina, but this is what I get excited about because So many of our clients are real estate investors. We're real estate investors. We see every day the power and what this can do for clients when they're in the real estate world and they start with the infinite banking policy. It's really a perfect fit where that 1+1 = 5. And that's why real estate investors just gravitate to this concept. It's just an incredible strategy. We use it. We see it firsthand every day. Clients using it. Sorry, Christine, I got a tangent there. What else did I miss here?
That's okay, Darren. I know you're very passionate about this, as am I. So I completely get it, and I think you covered it very well. One thing missing that I just want to add is that it's important to deal with someone that's specializing in infinite banking for real estate investors like ourselves, right? So we specialize in infinite banking. We're real estate investors ourselves, so we really know the ins and outs on how to use it, as you've heard here. And if you want to read more again in Darren's book, we definitely, we know the ins and outs. So it's important, just like, as a real estate investor, you want an accountant that knows real estate investing, right? You want a team that knows real estate investing ins and outs. And that's why it's so important to pick your financial planner, your wealth coach, that works and specializes in this field as well.
Thanks, Christina. Great point. And if you want to learn more or you want to reach out to us, check out controlandcompound.com. We've got a contact there. Read the book, listen to more podcasts. Thanks for watching. Thanks for listening. Don't forget to like and subscribe. Have a great day. Thanks for tuning into this episode. Don't forget to like, subscribe, and hit that bell button so you always know when new content is coming out. For more helpful tips and tricks, visit our Instagram, Facebook, or TikTok pages at Control and Compound. If you want to reach out to us directly or work with us, visit our website at controlandcompound.com. The links are in the show notes below. See you next episode.